All right, so January 31st, but it would not be a trade. It's not on your list, but would it be a trade? Okay, I see. January 31st at 4 a.m. All right, so let's pull up the layout. All right, so I'm gonna go back over the rules of the model in a bit. I'm just gonna answer this question really quick, guys. January 31st, 4:05 a.m. Here. This price action looks very familiar. I think, let me see here. 4:05. I see. So you're saying we get a confirmation of Q3 here. Okay, let me refer to the log really quick. I just want to make sure that we were not in another trade going up into this area. Let me go back. January 31st. I only have the long here. This may be an instance because we're above previous day high here. This may be an instance in which we opted to not take the trade because of being above previous day high, like not wanting to short into that. But you know, just from a glance, this should be a valid trade. I don't know about the context of everything else leading into this as to why I decided to not take this trade, because usually we're also referring to previous day's sessions and whatnot and the deviations of previous day's session. So we're still following narrative to see like how it might have played out. Yeah, exactly. So you got it. I was curious on if it was because, yeah, I think so. Because let's see, previous day. All right, so previous day closed bullish, right? OTE is bullish in this instance. Let's see where fixed volume range profile happened to land. So POC was in the area that we want to retrace to, right? But I think maybe we just traded above previous day high, so we opted not to take it because the overall narrative is bearish. And so when you trade above previous day high, it acts as EQ or midnight, right? That becomes your next key level to kind of treat as support and resistance. So we maybe just opted to not take this trade. How did it end up playing out? Okay, yeah, so you know, we would have got stopped out. But yeah, in this instance, I think it's one of those things where, because we actually went over a trade like this very recently in our back test, if you recall. But when you break through a key level, you go back to retest it, right? And what ended up happening in the trade that I did take is that I took the long without the actual retest of the level. It just missed it by a few points, and then it ends up coming back to retest it and then trading higher. So that's just because the narrative is already bullish, right? And then we already traded above previous day high. Ideally, previous day high, midnight, that should all hold price up at that point. And we shouldn't trade lower. So I think we maybe just opted to not take that accordingly. And I think here, let me see. We also didn't get like a decent displacement out of the zone. So once we confirm, this is a sign you'll see all the time, but once we confirm the CSD, right, you want to see further displacement away from the zone to confirm that the CSD is going to have continuation, because this can, the way you know it's a run on stops is when you have this CSD form and then you trade right back above it. Right, so the reason, so Adrian, for example, would have taken this trade on the top of the zone because that's his model, right? He doesn't necessarily require OTE, but I've made that a requirement in the model. So where OTE falls here is that OTE is up here, but we ended up creating a BPR on the way back up to that. So didn't take it. So I think we're, does that answer your question? I think that's why, maybe. I'm sure that's in a recording from this time for why we didn't take that trade. It would be hard to find it, of course, but I'm sure it's in the playlist. I see. Okay, for that time frame. Okay. I'll maybe go through the reps and I'll let you know a better answer if I come up with one. Thank you. All right, so let's see. So guys, what we are trading, or what we are backtesting currently as a group, is Adrian's 5-minute Q3 manipulation model into a 4-hour candle expansion. So the typical time frame alignment that most people trade is a 5 minute to 1 hour. In this case, we're actually trading a 5 minute to a 4 hour. So not the typical time frame alignment that people use. The reason, or the way this kind of came about, is that he noticed that every time there was a 5-minute manipulation, he would draw a deviation from that 5-minute manipulation, and then the next 4-hour candle would happen to just expand towards that deviation. So this is something that we are trying to prove, hence the testing. We're not saying that this is a model that indeed works yet. We are testing it to see how accurate this model is. So the way we set up for this model is we mark out previous day high, previous day low, OTE in the direction of previous day's close, as well as fixed range volume profile, which is not depicted here. Then we jump up to the 1 hour chart and we mark out any fair value gaps, as well, any fair value gaps in that OTE area. Then we drop back down to the 5 minute and we simply wait for a 5 minute manipulation to occur during Q3 specifically. Once we get this change of state delivery, that confirms the manipulation and it leaves behind this manipulation zone. We then draw our standard deviations from that manipulation zone. When price returns back to the zone and hits an area of OTE coupled with the zone, we can then take an entry targeting 1.5, 2.5, 3.5, and 4.5. So the targets are another variable that we are testing for. They're not hard targets, but the first target is always 1.5. So once price trades to 1.5, we trail our stops if we got our entry. If price trades to 1.5 before returning to the zone, we do not take that trade. That trade idea is invalidated, because 1 to 1.5 is where counter trend manipulations are likely to occur. So if it's expanding down there quickly, it can expand up just as quickly and actually create a change of state delivery in the opposite direction. So that's how the trade management works. Does anyone have any questions before we get started? At the beginning of the session, I always share the link. Here is the link to all this data. Going over the indicators for the model, Josh used 90-minute cycle indicator. This just marks out the 5-minute quarters. So each quarter is 90 minutes long. This is not the same Q3 or not the same quarterly cycles that JD trades in the morning. This is just, he trades the 1 minute. These are the 5-minute quarters. Then we also use OTE, automatic OTE Pro Plus. This will mark out your OTE for you. If you guys are interested in using this indicator, it is paid, but you can use code Kingline for 20% off. We also use ICT kill zones and pivots because we see that a 5-minute manipulation happening at session liquidity, it usually leads to the A+ setup. And this one is not necessary for you. This one also helps ICT times by Josh U as well. It just marks out your kill zones and your SBs as well as your 50-10 macros at the bottom. So far on this model, we do have a 65% win rate at about a 2.8 R now. So prior to the last backtest session, this was averaging at about a 70% win rate with a 3 R average. But as we take trades with 0 R, it brings that average down. If we omit all those trades, or not omit because some of them are break even, right? But yeah, if we omit the break even trades, it's probably still hovering around 3 R. As you can see, some of these trades are well in the double digits. So I wouldn't be too discouraged. There's a lot of trades here that are BE. At some point, towards the end of the back test, I will be able to isolate all this information. So I will remove all the losses from, or I will remove all the R from BE, things like that, to give us a better idea of the R, the risk to reward ratio for the winning trade specifically. So yeah, if you guys don't have any questions, I'm gonna go ahead and hop right into it. I'm aiming my best to finish up February today. My goal in the last backtest session was to get to 100 reps and to do a refinement. But because we're so close to the end of February, I think I'm going to opt to end February 1st before that refinement. So if we can finish up February today, Thursday may be a refinement of the model, which could be fun because Adrian also streams with us on Thursday. So I may go over the refinement, or I will go over the data refinement on Thursday backtest session before the weekly review with Adrian. That may be how that plays out. I'm going to unlock the page now and go to that date. We were on February 19th. All right, and the last trade we took, okay, so we finished up February 19th. That was a short. We got the win. So we're on Thursday. So I will just bring us to 1800. Oh shoot. Let me end this. There we go. Alright, so we just play forward one candle. That will bring us to our current data. So again, we have our high and low mapped out from previous day. Previous day evidently closed bearish. Let me just double check this. Okay, so no, it was actually an inside candle. So we technically don't have a bias for today. Because it closed inside, right? We failed to close previous day high twice though. So we took previous day high, didn't close. Oh wait, no, we did close above it. And then this candle, we closed inside of this day on Tuesday. And then we just have this BSC below us. I'm gonna jump up to the hourly to see what PD arrays are playing out. So it looks like this BPR is holding so far. And we don't have any fair value gaps in the most recent price action. I'm not gonna like put a ton of BPRs on the chart, so I'm just gonna use this one because that's the one where we are displacing away from. Alright, so let me just go back to see why OTE is displaying bearish here. So we opened the 19th here. Daily open there. 4 p.m. Okay, so it did close bearish. So daily open is here. No, the open is down here. And 4:55 closed here. So we closed just slightly bearish. So that's why OT is mapping out bearish. So we will go with that. All right, and now we're just gonna map out our most recent Q3s so that we have an idea of the framework from the previous day. I'll just bring that out. So this is Q3. This is the short that we took actually. Oh, sorry. This was the CISD. What am I doing? Okay. Q3 p.m. And doesn't look like we have anything else. I want to say that leading into this Q3, we didn't have much going on. Don't recall that much. Alright, so we'll just play forward and kind of see what price gives us. So if you're not familiar with backtesting, or if you haven't backtested as much as I have, we are backtesting the data, right? So we do market replay just so that we can build the muscle in being able to see the model live and kind of get an idea of how we would read the model live as we're backtesting it. But if I do read it wrong, I do actually record it according to the data as opposed to how I read it, right? So this isn't, we're not testing how I'm reading it or how we're reading it as a group. We're testing it mechanically for how the model would have played out. So if I play too fast on occasion, things like that, we do go back and correct it because we are testing the data itself right now. Let me just pull that. All right, so we did reach 4 to 4.5 deviations. We only got to 2.5 on that last trade before it closed and went to next day. We don't have anything that we can take a trade from right now. But with the narrative of the day, we're basically looking to get into EQ of previous day to trade into previous day low. Anywhere in this area, although it does all look rebalanced. So the only area I'd think we revisit is right here, which is daily open and EQ. So I don't know that we get into these other OTE zones or areas. Levels. All right, we just took Asia low right there. Let me turn my demonstration on. We just took Asia low there. We're below 25% of previous day range, and midnight is right there, true day open. All right, let me see here. Q2, 130. We did take TMSO, but we didn't take Q2. I don't like that as a Q3 manipulation. I like it to be super obvious. This is a little bit ambiguous. Just in case I'm wrong, I will outline it. But we did close those down close candles. Yeah, okay. Just want to zoom in there, make sure I'm good. Displacing away from midnight now. Alright, so we didn't get a return to the zone anyway. I'm just going to follow this with OTE in case it decides to. But we're getting into the area in which I wanted to see the short form. And it's just a matter of, does it form during Q3 or not? Oh, thank you. Let me thanks, Cozy. I was typing quickly. Let me edit that really quick. Pretty sure I can. How do I do this? I've done it before. No. We finished NFP here. There was a lot of Fed speakers in February though. I know I can do this. How do I do this? It's not letting me do it. Okay, the typo's gonna have to stand. All right. So we're back into EQ of this range here. We're at midnight here. Let's see if it actually offers a trade. I'm not going to take it because I don't think that this is a valid Q3 manipulation. For Q3 manipulation, we really want to take previous quarter low. We did not take Q2 low here, so I don't like this as a Q3 manipulation. But again, I'm mapping it out just to, in case I'm wrong, just for you guys to see that I'm not perfect in reading price. We did already reach 1.5 standard deviations anyway, so we don't take this trade regardless of if this is a valid manipulation or not, per the rules. Oh, nice, thank you. How'd you do it? How come I couldn't do it? Unbelievable. I know I've done it before, but I couldn't figure out how to do it. Oh, there we go. Change the topic. I found it. Thank you. Alright, so bouncing between EQ and midnight. I don't know if we have news today neither. Let's see. February 19th. Okay, FOMC meeting minutes. Sorry. I thought the manipulation could occur prior to Q3. Just the CISD. No. Manipulation. So the manipulation can occur. Let me just clarify. The manipulation can occur in any quarter, right? But we are only trading the framework from Q3. But it's when we confirm the change in state of delivery that confirms when that manipulation is happening. Does that make sense? So price can do a lot, and it can be down here and do this for a long time. And when it closes this high, as long as this candle is closed in Q3, this entire thing is a Q3 manipulation. So this can be like Q1, this can be Q2, and then this close above this high happens here during Q3, and then that's how we consider this a Q3 manipulation. Alright, so alright, Asia high looks like it's gonna get ran here. Want to see what Q3 offers here in AM session. Okay then. Alright, so we went up to daily open, we went up to EQ, we ran out 2.5 deviations. Because here in Q2, we have this is the lowest low, right? So the high before that low was closed here. So this is a Q2 manipulation in my opinion. Because the lowest of the lowest low of the entire cycle, Q1 through Q4, happened during Q2. Yes, exactly. And then it closed higher. So here, although this is another CISD happening in Q3, we really want Q3 to take, or we really want this manipulation to take Q2's low. Yes, yes, yes. Okay. Alright, so we have a CISD here. Which these ones can be a little bit tricky when it actually might just be this. It might be this. Let me jump down to the 1 minute to see how that happened. Yep. So high, low. It's actually this, which is really weird to map out. Let me jump up to the 15 minute. Okay. So I'm gonna go with this 15 minute deviation here. So this is the low of this candle before the high of that candle. I'm gonna go by that, which is not matching up with the 1 minute. The 1 minute has a little bit of a low before that. Now this is going to be the hard part. So the CISD technically occurs down here. Okay, don't give me my template. There we go. It occurs down there, but we can see by the eye. So this is why I'm saying this is weird, is because we can see to the eye that like this is the low before the high is rated, right? But then you have these bodies telling a different story. Obviously the bodies definitely tell the true story. So I'm just going to have this mapped out to so that we know that this is technically where the CISD is occurring. But because this is the low before the high, I'm going to use this area as a manipulation. Now, this may lead us to not having a trade. Okay, so 1.5 is down there. Let me mark out OTE. Oops. All right. And so we can take a trade at the top of the zone. And any of the levels above that. Let me spread this out a little bit. There we go. So imagine that I have an entry waiting, stop loss is there. So previous day closed bearish, we traded into previous day EQ. We have the Q3 change of state delivery manipulation occurring. So we can take this trade mechanically 100% after running out 2.5 standard deviations. Let me actually move it to this low here. Okay, yeah, so wicking right through 2.5 standard deviations. Let me clean this up. Imagine that I have limits on. Okay, so 2.5 target reached. We're all of our targets for 2.5, or all of our trades for 2.5, 3.5, 4.5 are now break even. 1.5 would have been closed by now. Beautiful entry. Okay, there we go. So that's a win. Let me back this up one more candle so I can track this really quick. That was just super fast and clean. Let me go back to see what the news was. Okay, it was at 2 p.m. and then 5 p.m. for Trump speaking. All right, so let me place all the positions on. So now is the best time for you guys to ask questions if you have them. I'm going to take a bit of time here to track the reps. And I do track every OTE level as its own entry. Okay, that's the best it's going to be. Hold on. 170. Okay, yeah, 169.75 it is. And I'm going to track these individually. These are some huge 5-minute candles. This is when price action starts going bonkers. I remember. Huge ranges. Stop loss there. Okay. Alright, so I zoom out to take one big screenshot. What happened to our fixed range volume profile? Where's that guy? I must have accidentally deleted him. First backtest session with you, and I'm so far behind, but thank you. No worries. If you want to catch up, you can watch the videos that are in this playlist. Let me get that for you. So this guy right here. Oops. What is going on with my life? Here, I'll just drop you that. That should be it. I'm not clicking anything correct today. Alright, so if you have questions, feel free to ask as they come up, right? I'm sure like this is going over a lot of people's heads if this is your first session. I did go over the model description and the rules right in the very beginning. So when you go and watch today's video back, you'll have all that information. But you know, feel free to ask questions as they come up, and I'm happy to go over anything. Review is always good. Repetition is good for everybody. So adding all 4 reps here at one time. 101, 102, all NQ. This is actually an unnecessary column in this specific back test, since we're only testing NQ. Let me put a marker here. Thursday, February 20th at 9:30. Yes, it does need special indicators to a certain extent. You can kind of just live without them if you want. It's just OTE, so you can just straight fib it up. But There is one paid indicator. If you want access to that indicator, you just use code Kingline, and that should get you 20% off. Let me share this. Here is the link to the layout. And then I'm just gonna paste. This is all Thursday, no problem. My pleasure. This was short. All right, and let me paste the chart first. So I'm going to track this as is for a second, and then I'm going to go back and see how the trade would have panned out if I used that full CISD instead of the manipulation. Instead of the manipulation that I mapped out. Just again, because to the eye, you can see that that's the low before the high, right? But, and then on the 15-minute, that was also the correct manipulation. It just wasn't necessarily, it didn't necessarily match up with the CISD. So the entry occurred on the 940 candle. What do I do? Let's just pull it to London since it's such a huge expansion. 940 for all. Notion is pretty slow now that we have so many reps, so this may take a bit. Alright, and we exited this specific trade in the same candle, 940. I'll just put 945 for the sake of the duration. Next candle over. Five minutes. This is the 6 a.m. to 10 a.m. candle. We entered the trade during Q3. The PD array was a fair value gap. Fair value gap. All the other ones were inversions. This is the 0.5 level with the zone. And was there SBS? It would have been 2. And everything else we don't know, because it hasn't played out yet. Oh wait, this we know. Oh, there was no macro on 50. Okay, so all hit money. 1.5. Because it's the zone, I'm assuming it's a 1.5 hour trade. Yep. And then I just want to take oh, never mind, this is the 1.5 trade. Wait, why did I put FOMC meeting here? Oh, Thursday. Unemployment claims. Okay, so there was no news for the 9 a.m. open or 9:30 a.m. open. It was 8:30, which didn't deliver anything. Oh, so okay, so it went and took the high. 8:30 news went and took the high. All right, so now I'm just gonna record the other reps here. So I just moved this up to 0.618. Oh, wait a second. I did that completely wrong. No one even corrected me. I need to bring this all the way down to 4.5. What am I doing? This is the wrong link. Hold on a second. I knew it didn't feel right. I need to mark out the trailing stop here. So once 1.5 is achieved there, we trail our stop to break even. Yeah, I'm on the contract. I'm on the front month contract. Oh yeah, NQ versus MNQ, don't do it. Like I always tell everyone to test NQ and chart NQ because you know, it's a M and Q is technically a derivative, right? It's a derivative of NQ. So you may as well. Yeah, true. Yeah, I mean, hey, if the data is different, I'm sure everyone would be happy to see it, right? Because I'm sure a lot of people trade MNQ instead of NQ. So if your data differs from my data, I think that would be super helpful for everyone that trades it. Let me delete the second guy here. Alright, so this actually, they all hit all of them. All the entries hit all of them. Completely blanking tonight. Okay, good to go. Now let me adjust this. So the next possible entry would have been 6.618, which is the golden pocket. And I did track that incorrectly as well. 950 is the exit. Okay. 0.618 was also entered. Oh, we did not get 0.79. We didn't get the soup level. So it's actually only 3 entries. So all of them will be the same. So 950. Let me delete this one. Q3 inversion and the fair value gap. This is 0.618, 0.705, 2, no 4.5, no macro. This trade, ooh, I did the last one wrong too. 4.98R. Well, let me go back here. Just pull this down, not that. Okay, so that was 4.5R. For the entry off the zone. Alright, and then, let me, okay, great, I left the chart. This is the right chart. It is. And then we'll do the last entry, 0.705. Just want to zoom in here to make sure I'm not, okay, yeah, we didn't get 0.79. So 0.705 there, trailing stop there. And this would have been 6.78R. Hold on, Stefan, I see your messages coming in. 6.78. Wait, what happened here? That's okay. So I didn't do the right chart. I didn't copy the link. What in the world? Okay, hold on. Let me finish this really quick. What is happening? 9.5. 10 minutes. 6 to 10. So we're tracking 4-hour candle. We're tracking the quarter that we took the entry in. The PD arrays from which the entry was in. What SBS entry it could have been. If 5 swept 4. And if the entry occurred during a macro. Alright, let me go back and do this one more time. Okay, 0.618. Trailing stop. Down to there. 4.98 R. I got that much. Okay, got all that right. Okay, so we're back up to 2.89 R. We're up to a 66% win rate again. Let me read your question now. Some of it's been slightly off between NQ and MNQ, but not much. Some of the entries were a little later and some didn't get all the fills so far. But I'm not that far from January 29th to February 7th. Oh, nice. No, that's good because there's a lot of SMT between MNQ and NQ. So that's good for people to know, honestly, when the entries aren't filled and things like that. It's going to be nice to compare your data to mine. Alright, here we go. So, I wanted to go back and see if we waited for this CISD down here. And let me just jump up to the 15 to show you why I chose that. So on the 15-minute chart, the CISD occurs with the where the manipulation is. I'm sure, let's see. The open here is at 203.25. The low here is 203.25. So same exact level. This is why I chose this area as a manipulation, because jumping up a time frame, the CISD is right here, right? So same exact thing. It's actually technically that low. But on the 5-minute chart, to the eye, again, the low right before the high is rated is this one, which is why I chose this level. So if we're going by the 5-minute chart and we used this level instead, I wanted to see what that trade would have looked like and if we would have been able to take it in general. So there would be the manipulation level. OTE would still be that high to still that low. Okay, so we would have gotten all three entries still. 0.5, 0.618, 0.705. We wouldn't have gotten 0.79, it looks like. Let me just back that out. Okay, yeah, 0.79 still wouldn't be tagged. The R would have been better, actually, it looks like. So let me just do a quick draft of this. So the deviation would be different as well. Okay, so 2, 3. Wait, hold on. What am I doing? I'm not doing the targets. I'm doing a full pull. Okay, let's see if we even hit it. Okay, we hit it. All right, so 6, 3, 8, 6, and 11, 6. So the R would have been way better, actually, if we did that one. I'm going to stick to just this low before this high. Just so that, you know, I don't know. Because it's a lot more mechanical for it to be this low before that high, in my opinion. Because this is a little bit hard to read. So I think for the novice, it'd be easier to go with that one instead of choosing this. I don't know, you guys can maybe chime in on that if you think it's easier to read the up close candles before that. But I think because of the 15-minute chart, because because these up close candles on the 15-minute chart match with this manipulation, that's super easy to tell to go up in price, up in time frame as opposed to lower. Sweet, thank you. All right, so let's see if we get anything else here. I'm gonna delete all of this. And then We already reached the full deviation. Obviously, we've reached that full deviation as well. We're into almost symmetrical price swing for OTE. And it's just now 10. So we're waiting for another Q3 manipulation to occur since we've reached these full deviations already. So we'll just fast forward here into another Q3. Alright, so here is another Q3 now. We won't have another change state delivery until there because this is the low that's holding so far. Yeah, so a ways away, so nothing really happening. The only thing we can look for is a bearish CISD, unless Q3 comes down and manipulates this low. All right, Q4, so that Q3 didn't play out, and we're into the next day. So one trade that day. So now we have a new previous day high and a new previous day low. We will mark out our fixed range volume profile. We are now on Friday. Yep. Yeah, Friday's price action because that's Thursday evening. Previous day closed bearish. Point of control is down here, actually 25% of previous day, and we're already in OTE area of previous day. So from here, assuming that we get another bearish close, let's just see how. Let me back this up one candle, and let's see how the day ended up closing. All right, so see, we're trading into a BISI here, and we failed to close below it. So again, referring to the mechanical daily bias video, we closed previous day high here on this candle, right? Then we failed to close previous day high. We failed to even take previous day high or low on this candle, so we have an inside candle. Then we took 3-day lows actually here, and then failed to close inside of this BISI. So with failing to close below previous day low but not closing above previous day high, this day on Friday's price action, I'm actually neutral, right? But leaning bullish because we failed to close below 3 days previous day lows as well as this daily BISI. So I'm leaning bullish, although we are just neutral. Now OTE is going to map out bearish because previous day closed bearish. So we just, go with it, see what happens. So again, point of control is down here. 25% of previous day's range. Oh no, that's actually 25% extension. Oh wait, sorry. We need to play it forward. There we go. Yeah, 25% of day's range. Let me go back and delete all of that stuff. My bad. Not letting me select multiple lines today. Jumping up into the 1 hour, gonna map out our PD arrays. So we have this fat fair value gap right in OTE zone. And then we have this one that we displaced from. Alright, so I've mentioned this before. If ever you think that you want to confirm price is bullish here, right? So we're neutral, leaning bullish because we failed to close below previous day's low. We think maybe these down close candles, these series of down close candles may become an order block. This is not part of the model. This is just a discretionarily reading price at this point. I'm just going to go over how I would look at this to help determine bias on a more advanced level. I would draw out your EQ of the bodies of these series of candles. which is known as mean threshold of an order block. And then I would want to see, does this 50% hold price up, or do we consolidate around it and break down, or do we get above it and break down, whatever way it decides to trade. But does price continue to stay above it, or does price continue to stay below it? Once price is staying above it and then we close above here, then you have now confirmed bullish order flow, and this down close candle should hold price up. If we get up here and we sweep this high, then we've simply ran buy stops, and then we should see a shift lower, which would be in the 90% area of OTE, or previous day's range. This is the most recent 5-minute order block right around midnight, so price could get up there before it breaks down. So oops, now we just need a Q3. Hold on, the most recent Q3 we had was this guy here, and nothing else played out. So we just slowly grinded up, retracing into this very bearish leg. We just missed previous day's midnight. All right, so we got above 7.05. We're back below it. Oops, did not mean to do that. Retest the daily open, consolidating on 705. So far we have this high holding, which is not a Q1 or not a Q3 manipulation, so we won't take a trade from it. Nothing happening in Q3. Let's see if we swept Q2. Okay, we didn't sweep Q2, so that will not be a Q3 manipulation for me. Here is midnight. Here's Q2. Ooh. Okay, hold on. Let's see what happens. Okay. So we close this low. Here. Oof. Q2 manipulation. Can't do it. That sucks. So on this low here, we close it. We close below it here. Still Q2 there. Just ahead of Q3. So can't take that trade. And this is a new quarter, unfortunately. But we got right up into OTE 70.5 and then broke down. We're now trading back below 0.618, back below midnight. Okay, Q3 is not over yet. Okay, Cozy. Thank you. Cheers. Alright, so Q3, to my surprise, came down. We swept Q2, Q1. This is what you want to see, right, for Q3 manipulation. And now we have closed this high. All we need to see now is displacement away for bullish price action. Now here's the thing, right? We have this unmitigated 5-minute OB above us, so this could be a short-lived long. We also went into the day again with a bearish narrative because previous day closed bearish. Now applying the advanced theory for bias that I told you about when we mark out the mean threshold of that future order block. So far we traded right above it, we retested, and it's holding price up so far. We've consolidated above it, and we've now swept the lows and traded higher. So because this is all happening overnight, I would assume that we're going to retest this again during regular trading hours. But right here we do have a setup for a long. We are in the top quartile of previous day's range, so we can aim like previous day high is a logical target from here. Again, we just need to see displacement first. This could just be a run on stops. Thank you, BNB. Appreciate it. All right. Ooh. Very tricky. Very tricky, I have to say. So we liquidated Asia high here. We didn't close above this high here. And we're now back below this high, which is where we would see the liquidation occur if this is a run on buy stops. We also are lacking displacement out of this area, so I'm not going to take a trade here. We also don't have OTE yet from this area, so that low to that high. OTE is down here. But there's a lack of displacement after this change of state delivery. Let's see what happens. Okay, there we go. That's what we want to see. So now we have our displacement. We have a new high. There. We need to get into 50% in order to take the trade. This may be a missed opportunity. Okay. Where's OTE at? Here. So we just keep following it until it returns back to the zone. Let me also draw the standard deviation so that we know we're not entering a trade we shouldn't be entering. Okay, so we're only at 0.5. We just keep following it. No. Yeah, so missed opportunity. So this trade here is an example of Adrian may have taken this on this top of the zone. I don't know for sure. To me, this lacks displacement out of the zone, right? So the displacement doesn't happen until here. But this is an example that if Adrian just took it off the zone without requiring OTE, he would have gotten it. Right, because before this, before these new highs were made, this is the highest high. EQ is never retested, and then we go back. EQ not tested. EQ not tested. EQ not tested. Right, so we don't, for the rules of the model as we're backtesting it, we don't have a reason to take the trade. But Adrian trading it live, having tested the zone, he would have taken that. If you guys have questions, feel free to ask now as I take a smoothie break. Oh, that's a good question. Yes, it would be technically, right? But I think we've gone over this before, Stefan. Is the signature that we're really looking for in a manipulation is not necessarily a one candle CISD. You really want a series of candle CISD. Yeah, so you want something like this, right? Where you have displacement in the candle. Well, no, you don't have one here, but you have fair value gaps in the candles going down, and you have fair value gaps in the candles going up, which is why I said this lacks displacement, because we don't have that fair value going up. So we ran these lows, great, right? And we created fair value running into those lows. We want to see fair value coming out of those lows as well. I think if we took every one candle CISD that occurred, like, we would just get slapped around too much. So you want to see that signature of creating displacement into the low, displacement out of the low, and that is like the classic Q3 manipulation that you're looking for. So here the displacement wasn't, you know, satisfied until here, which is above the zone, and this is just a mistrade. I'm just having a couple bites of my smoothie. Again, if you guys have questions, feel free to ask now. Yes. I'm the Rant 14. If you scroll up in this chat, I shared a YouTube playlist. This playlist is the entire playlist for this model, the backtest sessions for this model. You can also go into my channel under London and Asia session, and this is where I post all the links for the videos that we record during the backtest sessions. The playlist is also listed there if you just scroll up a little bit. BMB, this model is Adrian's 5-minute Q3 manipulation model to 4-hour expansion. Sorry, 5-minute Q3 manipulation to 4-hour expansion model. We don't have a name for it yet. Obviously, that's a mouthful. But we've made it a little bit more mechanical for the sake of backtesting. I will show you the stats for how this model came to be. So Adrian did a backtest of all the manipulations as well as the standard deviations from those manipulations. So 50% of the time in London and in New York, the manipulation is probable to happen during Q3. Of all the standard deviations that occur from all the manipulations, 2 standard deviations hits about 80% of the time. 1.5 hits about 90% of the time. This is why we trail our stops at 1.5. This is why we don't take the trade if 1.5 is already achieved. So we are testing for further targets here: 2.5, 3.5, 4.5, which is only 4. But we opted, the way Adrian actually trades the model is he takes any quarter manipulation that occurs and he just follows the narrative from that manipulation accordingly, the same exact way that we're doing it in the model. But because we see that Q3 is probable half of the time, we are limiting our trades to only Q3 manipulations, and we're aiming for all the targets. So the way you see Adrian trade this live within the server is that instead of taking the OTE levels as his entry, what he will actually do is take the entry of just the zone, and he's still aiming for these half targets. So if Adrian were in this trade live, he would have had his entry here at the top of the zone, stop loss at the swing low, and first account would be aiming for this 1.5 standard deviation target. Second account would have been entry at the zone, stop loss at the low, profit target at 2.5 standard deviations. And then he would have had a third account aiming for 3.5 standard deviations, entry and stop loss both in the same place. And then he would have had a fourth account aiming for 4.5 standard deviations, again entry and stop loss in the same place. And this is how he trades it live specifically. Again, not worried about where the manipulation actually occurred. He's taking all manipulations, but he's entering all 4 accounts at that same entry, and then one account takes profit here, there, and there. And when 1.5 standard deviations is achieved, all of the accounts go to break even simultaneously, with the exception of the first account, which he closes when it reaches 1.5 deviations. The thought process behind this is that instead of taking partials and minimizing the reward that you get for the risk that you put on the table, you are now spreading the risk as well as the reward across multiple accounts. So instead, if you wanted to risk $400 that day total, each account would risk $100 each, and then that $100 would have yielded $150. The next $100 would have yielded $250. So it's a bit more dynamic, but allows you to achieve your full R without degrading your risk, your reward in any single trade. No worries, Savvy. So this is how he trades it, a little bit differently from how we're backtesting it. I'm kind of doing it in the opposite way, in which I'm actually tracking all these different entries. I'm tracking 0.5, 0.618, 0.705, and 0.79. And we're tracking to see what retracement level achieves each standard deviation is pretty much the goal. My pleasure. Alright, let's see if we can get through February. Let's see if Friday presents anything here. So we can't take the trade now, guys. Just, you know, so we're just gonna watch this play out, and let's see if we get another Q3 manipulation. Oh, darn, I played too fast. Okay, let's see. We get the close here. And that is Q3 indeed. Do we get the return to the zone? Probably not. Do we have 1.5 standard deviations met? Probably already. Yeah. So we can't take this trade anyway. Unfortunately, we now have to wait for the next Q3 or see if Q3 presents. Oh man, another just beautiful day of short. Alright, Q4, so can't take that. So our goal with this overall is to get at least 1 trade per day. Some days we obviously get a little bit more than 3 trades per day. Okay, so that's end of this week. But if this does not suit your style for taking 1 trade a day, don't force it, right? Like if you want to take multiple trades per day, this model probably is not for you. Although it is, I very much encourage you guys to experiment with those types of things early on in your career. All right, so Friday did end up closing bearish instead of bullish, like I thought it could. Yes, this is always recorded. We have point of control right around weekly open. We have several 1 hour SIBIs here. So I'll actually just mark out this BPR first, and then the rest as SIBIs. Okay, that would actually be the last. No, I'm gonna mark out the one at EQ as well, even though it's slightly below EQ, just because we have this breaker here. All right, so very simple narrative going into today. Previous day closed bearish, right, which was Friday. We have several open SIBIs above us and this BPR. So the way this, like, Adrian would typically map this out on in his daily daily like forecast, is we're basically waiting to get into EQ or OTE, and then we're waiting for some sort of Q3 manipulation to occur right there. Okay. And point of control is down here though. This, we're basically bullish above it and then bearish below it, for like the very basic explanation of how point of control works. All of the volume, or most of the volume, being right here between EQ and OTE. Okay, PM session low. Okay, all we have to go off of for the previous week is this Q3 that we did not get the opportunity to trade from because it displaced immediately. So we just wait for a Q3. This is Monday of the next week now. We don't take any trades on Sunday. Here is a valid Q3 manipulation. So see, Stefan, this is what I'm talking about. We have fair value going into the low, fair value coming out of that low. This right here is a very classic manipulation. All right, so we're into Monday, and the trade opportunity has not presented itself. OTE, standard deviations, and we want the standard deviations to line up with where we're aiming, the area that we're aiming for, right? So imagine that I have limits waiting here. Okay, never mind. It's gone without us. It has to happen. So we're waiting for a close above. Oh wait, you're probably talking about what I just said to Stefan. You want fair value going into the low, fair value coming out of the low. So you have speed into the area and back away from the area. Into liquidity, missed the fair value, but into liquidity and back away from it. So you want fair value gaps going into it and away from it. Like that's a signature that pretty much repeats over and over again for like a really, really good manipulation leg. Alright, so we haven't reached 1.5 standard deviations yet, so I'm still open to taking this. Okay. Top of the zone. Doesn't look like it's gonna work, but imagine that I have an order on here. Stop loss there. I'll track it as soon as it fails or succeeds. We're aiming for 1.5 standard deviations first. Now this is where it's tricky, right? Because we didn't reach 1.1.5 standard deviations per the rules. Mechanically, I can still take this because we didn't reach it, but doing exactly this, where we've reached up into 1 to 1.5 standard deviations, this area is known as like the manipulation zone, right? So this is where a counter trend manipulation can occur. So reaching up here and then changing state of delivery down here is very common, which is why we don't take trades when it reaches this area. But here it allows me to still take it, although it went up here and rejected. So this could very well fail 100%. And we're at 25% of previous day's range. If you know my criteria for like a trend day, this is where a classic sell day is bound to occur. So we're in this trade and we're stopped out immediately. Oops. Alright, so let me just track these really quick. We do have all 4 entries, unfortunately. Again, now is your opportunity to ask questions if you want. Going to track this. If I go up a few more frames, there's another trade. Oh, like right here to take it? Is it in Q3? Oh, well, is it there in Q3? Okay, sweet. Good to know. Hold on, let me just track this really quick because you know we don't form fit, guys. So so like I just want to point out, right? Discretionarily, I could tell you that we're probably gonna get stopped down. This is not gonna work. So obviously in live trading, I'm probably not gonna take that trade, right? One of the key things here for this Q3 manipulation is we did not take out any type of session liquidity. We only took out Q2, which is why it's a valid manipulation, right? So for me, this actually creates Asia low right here too. So for me, this is not, I don't trade Asia often anyway, but this is not the manipulation that I'm interested in trading overall, right? Also note that this manipulation happened during Sunday, and we just took the opportunity because it presented itself. The entry actually presented itself on a Monday, like after midnight. So like even though I know discretionarily this trade is not going to work out, I'm still tracking the data, right? Because we don't form fit. If you don't have true data, you don't know how well your model is actually working or not. So I'm tracking this regardless of the fact that I knew that this was not the right long to take. Okay, we don't have a trailing stop. What am I doing? Alright, so just bear with me here, because you want data to be true. I actually need this screenshot. Alright, and then, yes, we got all 4, unfortunately. I need to put a marker on here. This is Monday, February 24th. I know this is extremely hard to watch when I go through this part of the backtest. It's brutal for me to even do. These are the moments you decide, is trading worth it or not. Alright, this entry occurred at... First two entries occurred at 2:20. Thanks, I appreciate it. And all of the trades got stopped out at 2:45. So far, quick stops, it seems like, on the model, which is a good thing. 25 minutes. This would have been the 2 a.m. to 6 a.m. candle. We entered the trade during Q2. It was in OB, OB, inversion, OB. Okay. OB, inversion, OB, .5, 618, 705, 0.79. Do we have SBS? We have 1, 2, 3, 4, 5, 6. Okay, so this was not even an SBS entry. Alright, so no macro here. Stopped out on all. And 0 on all. Alright, so of note while I'm doing this, 2.7R at a 64% win rate is still extremely profitable. And knowing this about your model, even taking losses that you discretionarily would never take, this is how you fix your quote-unquote psychology, is you develop your technical edge to the extent that you know that your model plays out no matter how many losses, no matter how many days you don't take a trade, it's profitable to this extent, and you know this with data that you've recorded with your own hands. Wait, I need the zoomed in screenshot first. Bump that over. So even like for me, when I use tools or indicators that, you know, obviously give me the data, like I have, you know, you meet a lot of people in this industry and you end up becoming friends with people that have developed all these tools with all these data inputs, and it goes back 20 years, it goes back 30 years, it goes back to the beginning of trading, things like that. Even when you're using those tools, although it's nice that it presents that data to you and you trust the person that made it, or you trust that that data will play out or whatever, you still do want to backtest that to a certain extent. Like you want to backtest how you're using it, right? And you want to backtest how many times that level delivered or got it wrong or whatever. So I would highly encourage you guys all to kind of get your hands dirty and figure out whatever way of trading that you're adopting, what kind of stats you're looking at, because then you know how much money to risk accordingly. Do you have a playlist when you backtest the JD's Q3? I don't have a playlist created, but the videos are on YouTube as well. Ooh, wait. No, it's not. I'm lying. So we did 3 different backtests of JD's Q3. And the only one that's recorded is the version that did not work. But you can feel free to watch it. We do, you know, we do actually go over things in that model as to how it differs from the previous versions that we backtested of it. But I do have the notions for them. So hold on a second. Okay, so let me see here. We have inverse fair value gap. I'm assuming that's V2, V1, V3. Okay, hold on a second. Let me take a look. I'll know. This is V1. Okay. V3. Okay, this is the good one. So basically this model, really quick digression guys, this JD's Q3 model, when we backtested it, our aim was to pass evals with it. So this is like peak apex trading time. This is when we were just like straight up gunning it on apex, to be frank with you. So we were full porting accounts with this model, meaning that we were trading all 10 contracts. So what we ended up discovering is that we had most of our losses that we were getting was because we were full ported, meaning that the pullback was more than 12.5 points, which you're seeing here in the notes. So once we discovered that most of our losses was because we were max leveraged, we did another version of the backtest in which we reduced our contracts by half, which is this backtest here. So we got up to about 93 reps. I think we only backtested this for about a quarter before we moved on to the next model, or the next iteration of it. But all the data, all the charts are in here, so you can take a look at that. And the idea in this is that we're not only taking Q3, like taking the trade during Q3, we can actually take it as late as Q2 and as early as Q4. So sorry, the other way around, early as late Q2 or as late as early Q4. And we defined early and late as the last 11 minutes of Q2 and the first 11 minutes of Q4. So allowing yourself that bigger window of when that manipulation will occur actually did help us get more trades, and it did keep the win rate pretty solid. So we have a win rate of 65%, and in this case the R is just slightly over 1 R. Anyone that's been trading for any significant amount of time should know off the top of their head that when you have a 1R model, you just need a 50% win rate to be break even or to be profitable. So profitability at 65%. This ended up truly being a really good model to pass evals with. I still use it to pass evals to this day. And then I use the 5-minute model to get payouts. Yes, 11 minutes. The last 11 minutes in Q2 and the first 11 minutes in Q4. So let's bring up the Kingline layout really quick. So wow, I haven't used this layout in a long time. Let's go to today. Haven't traded the 1 minute in a minute. In a hot minute. Okay, so our trade window for the trade would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So the earliest you can take a trade is right there to the first 11 minutes of Q4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So half of Q4. I probably missed one. That doesn't look even. Okay, so this entire area is what we were considering as a Q3 manipulation. Obviously, that's going to differ a little bit. Oh, nice, Stefan. Thank you. Do I have a favorite setup? Yeah, I do. It's basically just a 5-minute model, a 5-minute 2022 model at session liquidity. So it's the same exact model that we're backtesting live right now, except it has to happen at session liquidity. I don't just take it willy-nilly anywhere. So for example, here, when we get a close below, it's actually this swing low, but when we get a close below this swing low at session liquidity here, this is where I would choose to take the trade technically there if I was bearish on the day, things like that. So session liquidity, daily, weekly, monthly, I take the same exact model, literally a 5-minute manipulation in that area, and I'm looking for a signature just like this, where we have fair value going into the low, fair value going out of the low, and we have some sort of solid block within that mixture. So we have a breaker here, we have an order block here. As long as these are solid big body blocks, then I'm taking that, so long as it's coupled with 2 gaps. And then again, like this here ideally is like session liquidity, daily liquidity, weekly, monthly. And that's pretty much my A+ setup. That's my A+ model. Okay, back on track. Where are we? So we just need the last 2 entries. Yeah, I'm still gonna go for a bit. I think I can safely say I'll probably be here until 9. I do want to try to get through this entire trading week. So depending on how hard or easy the backtesting ends up being for this week, I will try my best to end February in this session. But I think 9:30 is safe to say I'll be here. Alright, so 0.705 occurred at 2:35. Guys, there might be someone streaming live right now as well, so I don't know for sure. I haven't looked. Oh no, it's just me tonight. Maybe he'll hop on around 9. So if you're looking to live trade, just look out for that. $226. That was still during Q2. Yes, they're all during Q2. extra chart. So I do one chart zoomed in of like, or sorry, zoomed out with the fixed range volume profile in the picture. And then I do another chart with just the trade so that we can get a better look at, you know, all the candles within. All right, 0.79 here. This was at 240. $2.45, 5 minute. Let me calculate the duration as well. Average. So average trade is over 2 hours actually. Wow, did not know that. 2 hours and 40 minutes. 2 to 6. If that's too long of a hold for you, again, don't force it. Probably not the model for you. Alright, and the note that I'm going to put on this is that the manipulation actually occurred during Sunday. So this is a Sunday Q3. Okay. Alright, moving on. According to Stefan, we have a winning trade coming up soon. Oh, wow. Okay, hold on a second. So we do have... Yeah. Let me delete this. So we do have this CISD here, right? And although this is not necessarily the signature that we're looking for, I really want this here, but we'll see how this plays out. We do have the CISD here. Am I? Okay, yeah. Sorry, it's this one here. And closed above it. Sorry, no, it's a down close candle, right? Yeah, it's a down close candle. We close above it. We do have displacement out of the zone. So we have displacement below this low. We have displacement back above this low. Okay. And then we have displacement out of the zone and the return. So here we would draw OTE. So we have our first two entries. And then we have a one candle manipulation, which is rare, with 4.5 leading right to PM session high, as well as the SIBI around EQ, but that 1 hour SIBI in general. So I want to see if we get the close above there. Again, imagine that we have all the entries on. I have stop loss here. So we got our first two entries. Again, so this is a good example here that I want to show you guys. Adrian would normally take the trade at the zone. Per hour test, what we require is that it reaches 0.5 plus the zone. So we don't take the trade here, we take it there at the earliest. Just reaching for discount. Okay, so we get the closure above here anyway. I do kind of want to see what the trade's going to look like if we moved it to that instead of this. But this is indeed, let me jump up one candle. Okay, so it's that. Sorry, one time frame. Okay, yeah, so that is indeed the high before that low, right? So this is how I'm deciphering these things. All right, so 1.5 achieved, first target gone. Second target gone. We've trailed all of our entries to break even now. 6 a.m. candle here. So this is a new rule that we've added. I actually need to add this to the rule set. is that when we are approaching a new 4-hour candle, because this manipulation here is presenting the deviations for this current 4-hour candle. As we approach a new 4-hour candle, a new manipulation will likely present itself. So as a result, we trail to break even if we have not already trailed break even. So if price never got to 1.5 and we're down here, we trail our stops to break even no matter what as we approach a new 4-hour candle. But since we've already broken even because we achieved 1.5, no harm, no foul, we're already there. So we just let price play out. Rough. Long hold. We'll see what 9 does. Okay, so now we have a new Q3 manipulation. So we would close anyway. So 2.5 achieved, max. Let me, I'm gonna just let it come to break even first. Okay, there we go. So right on this candle, we would come to break even and then eventually to our stop. This has been a common question as well, as like how often does our stop get ran after we trail to break even? Pretty much 100% of the time. So good for you to see. I'm going to start placing the orders now, and again we go through the brutal process of tracking the trade. So after a trader has tracked their model and they back tested their model and they've gone through the pain of tracking all the data and organizing the data to see what leads to the best trades, they get on the charts and then they decide, I'm going to be impulsive and just take any trade that I have not back tested. This is a reoccurring topic in our backtest sessions. You just don't do that, right? Because you didn't put in all the work. This is still Monday. Yeah, you didn't go through this brutal process. You didn't put in all the work to get on the charts and just take a trade that you have not tested, right? Because why would you do that to yourself? Why would you spend the hours of doing all the hard work and then just flat out ignore all the hard work that you've put in prior to that trading day, right? Just like basketball practice, soccer practice, whatever, when you're practicing for a speech, whatever sport or activity you've ever done in life, you practice for this thing, you do it the exact way that you practice. You don't just go out there and forget everything that you practice. So this is how you kind of reinforce again these quote unquote psychological problems or these gambling addictions, right? If you've gone through and you've backtested it and you've done all of this, it's very much going to reduce the probability of you taking a dumb trade in between your backtested trades. I need to leave a marker. Always forget. That's not one. So the marker is just so that when I look at the chart or just a screenshot of the chart, I know what the date is without having to look at the date on the backtest sheet. Oh, I had one here. Darn. Monday, February 24th, 3:35. And because you've seen your model play out so many times, it just makes it that much easier for you to see it play out in person, in real price action printing, and you know when you should be waiting and when you should be pressing that button. Monday, long. All right, now we were going to track the trades individually. Both hit money, 1.5 and 2.5. Oops, I think I tracked that incorrectly again. 2.5 there. midnight is fine. Alright, so that's 0.5 first. I'm gonna back up the stop loss. Right, entry was at 335, exit. Okay, exit is at 4. Alright, so that is 90, 85 minutes. 2 to 6. 2 to 6. And we entered the trade during Q3. And both trades were in this order block. So the entries we got were 0.5 and 0.618. And this was not SBS. Alright, and now just the chart. SBS is swing break sequence. It's a non-related ICT. It's not related to ICT. It's coming from a different. It's basically just a market structure model. Just to make it really short, it's by a guy named Stoic on Twitter. Stoic TA. Alright, so trailing stop would have been here and trailed on that candle. It used to be part of the entry criteria for the model. We decided to remove it. Oh man, we decided to move it from the entry criteria, but we still backtest for it as a possible confluence. So this was also entered at 235. Sorry, 335. Guys. 335. What's happening? 335. Okay, so we're starting to finally get some repeating times. I don't know if it's because we have the right amount of reps now, or if because now the entries are actually starting to occur very similarly day to day. 25. Alright, and then alright, so this is what I have to decide for this, because the 0R adds to the average. I'm thinking if I just leave these blank for the stop loss trades or for the BE trades. Oh wait, they're not. Those trades weren't. We won those trades. What's happening here? What's going on? Okay, 4.57R. Good grief, Jess. Okay, I might have to call it here. 4.57R. And then this guy was 3.22R. I'm malnourished today. I don't know what's happening. Alright, 3.22R. It's because I streamed AM session. I'm not used to 2 streams in a day. Alright, so I gotta get more familiar with SBS myself. Have a generalized understanding, but that's it. It's like a high-low. Yeah. I have some great screenshots for that. Let me share my resources with you guys. Let me just see where we are. 9:30. Okay, yeah, I'm gonna call it. I'm gonna call it. We're gonna end it here. I'm gonna place the line here so I know that this is where we ended it. That is going to conclude today's backtest session. I'm just going to drop a few resources. If you guys have any more questions about anything else, Feel free to drop them as I find these screenshots for SBS for Stefan. Let's see, it's gonna be under random probably. Okay, so we have SBS Model 1. My pleasure, my pleasure. SBS Model 2. And then I have more. I know I have more. This is the OG SBS without the 1, 2, 3, 4, 5, 6 on it. And then I just want to check for one more thing to see if I have it. And I don't, but I want to give you this for real price action. I have a couple of friends who were in the same group as... Okay, let me see if this is right. 1, 2. Okay, no, that's not it. Alright, there we go. So these are the screenshots that kind of break down SBS. Yeah, probably similar or the same thing. But these are pretty much like the only screenshots you need to give you the picture. And you're just looking for, when you see a close of these highs, you're looking for body closures, right? To confirm that first one, that first leg of one, it needs to be a body closure. Okay, guys, any questions at all? Anything, it doesn't have to be related to the back test. It could be about you, it could be about me, it could be about any of the Kingline, anything. Preferably not about the weather, things like that, but trading related. All right, great. Thank you so much for attending. Appreciate everyone being here tonight. This was actually a lot more people that showed up on the Tuesday than normal. But I am done streaming live sessions for the week. I will only be streaming my regular backtest sessions for the rest of the week. So the next time will be Thursday at 7 p.m. I will do my best to finish up this month of February before Adrian gets on. Adrian will be on around 8:30 to do his weekly review as normal. If I do an extra back test tomorrow night, I will let you guys know. I'll just add everyone as normal, and then the next session after that will be Saturday at 12 p.m. in which we normally go for about 4 hours. So, you know, bring a drink, grab a snack. And then next week I will not be here at all for any back test sessions. I will be away, but we will resume when I get back. What about the stop loss trades in the log? Wouldn't those be -1R? Oh, I was tracking that correctly, actually. I must have at some point gone wrong. But yes, they should be -1R. There are, yeah, see, like I was doing it right up here. So I must have just lost my mind somewhere and stopped tracking it as -1R. But thank you for pointing that out. I'll go back and adjust. Don't worry. I always do an audit at some point to like make sure I tracked everything correctly. And I record the audits as well. Thank you, Rope the Dope. Thank you for everyone that's always been here, or that's always been here and have chosen to show up tonight. Cheers. Have a good night, guys. Safe trading.